From the floor of the CME Group, this is Danny Riley on today's closing print. Ooh, they love to squeeze those shorts, don't they? You know what we're going to call this video? We're going to call it the S&P short covering smoke and burn, because that's exactly what they did. They burned the shorts. The high of the day in the S&P came in at 1866.5 recently. The low came in at 1845.80 early in the morning, and last we're 1866 even. Total volume, 1.4 million minis trade and 4,000 big S&Ps trade in the pit. MOC, we had 135 million to sell. The cash close came in at 1865.90. Tomorrow we've got the chain store sales numbers. We've got the jobless claims number. We've got the import-export numbers. We've got the EIA net gas number. We got Charles Evans speaking, and we've got a 30-year bond auction. Now, you know what? Now look, I'm going to say this again as I've said it before. I didn't go to school. I went to the school of hard knocks. And you know what I learned? I learned one thing. I didn't learn charts. I didn't learn moving averages. I didn't learn any of that stuff. I'm trying to learn it. But what I understand is I understand price action. What happens after the S&P sells off? And you know what? Today I came up with a formula, and I put it up on Twitter. And here's the way the formula works. First, number one, you get the S&P to sell off a little bit. Number two, you get the short sellers to initiate new short positions. Number three, you bring in the stock buyers. They start to buy their cash back that they sold. You know, all the biotech stocks that they've been selling over the last couple of weeks? Well, they started buying those tech stocks back earlier this week. And then once you get those buyers back into the market, you know, the actual cash buyers, then the S&P does the rest. All the buy stops, as the cash flows in, the S&P starts moving up. It starts to hit those buy stops, income buy programs. It's like a big musical chairs. And at the end of the day, you know what it does? It causes another big false start, and it causes big losses for the short sellers. I don't know what to say about this. We saw the same price action last year. Now, while the S&P may not be up like it was last year, it's not down very much either. We're seeing a big grinding trade, and all we're doing is getting a bunch of false starts, and then the S&P goes right back up again. You know what? I'm going to leave it like that. There's not much else I can say, other than we got to question a little bit about the Pitbull's Thursday, Friday low after the S&P went up so much. But that said, it may come late on Friday. I don't necessarily think it'll be tomorrow, but I'm going to leave it like that, and I'm going to see you tomorrow on the opening print.